Today's episode of This Week in Startups is brought to you by Walker Corporate Law, a boutique law firm specializing in the representation of entrepreneurs. Visit them at walkercorporatelaw.com. And by Sharefile from Citrix, secure file transfer built for business. Visit sharefile.com. Click on the microphone and enter TWIST for a free 30-day trial. And by AWS Activate, the Amazon Web Services Startup Program. It's easy to start and scale your business with AWS. Visit aws.amazon.com/activate.
Hey everybody, it's Jason Calacanis. I'm here at the Recode Conference with the beautiful Pacific Ocean behind me. And as you know, Walt Mossberg and Kara Swisher throw this wonderful conference. They've been doing it for years. It was previously called the D Conference, but now it's called the Code Conference. And there are amazing entrepreneurs here, and one of them is Adam Nash of Wealthfront. And he has a very special announcement today on the program that they are now representing over $1 billion in capital. And we talk about finance and building great products and his time at Next and Apple and LinkedIn. This is a serial entrepreneur who's seen it all and who's building a huge, meaningful business with Wealthfront. You're going to love this episode. Please stick with us.
That's what it's all about, man. They said money is the root of all evil. What? Funny how it feeds my people. We ain't gonna live like equals until we get the money, spend the money, and defeat you. Yeah, money is the root of all evil. What? Funny how it feeds my people. Yeah, we ain't gonna live like equals until we get the money, spend the money, and defeat you.
Welcome everybody. It's This Week in Startups here at the Recode Conference. And thanks again to my good friends Walt Mossberg and Kara Swisher for allowing me to not only come to the event year after year, but to also do a couple interviews here of the most fascinating people at the event. This is a tremendous event where the world's greatest technologists, investors, media people come together for a couple of days to talk about the state of the industry. And I always grab a couple of people who I think are doing interesting stuff. And today, Adam Nash is on the program. He spent a couple of years building a little site known as LinkedIn, and then got the inspiration for something called Wealthfront, which has a huge announcement today. So tell us, what is Wealthfront? Why did you create it? I know you worked with Andy on it. And what's the big announcement today?
Yeah, thank you, Jason. Yeah, it's really been a dream job for me. I joined Wealthfront about 18 months ago to transition as CEO this year. And Wealthfront's really a passionate topic for me because I really do believe that everyone deserves sophisticated financial advice. Mm-hmm. I believe that what's possible in software today makes that possible. And so, I'm proud to say that Wealthfront has been known for a while now, at least the last year, as the largest and fastest growing automated investment service.
What does it mean, the largest? Well, we know what largest means and fastest, but what does it mean an automated financial management service versus like hiring Goldman or Bernstein or whoever to manage your money? What's the difference there?
Yeah, so Wealthfront has a different idea about how investment should be managed, right? So we use humans for what we think they're best at. We get the best PhDs and CFAs to come up with robust investment strategies. We use investment strategies that are based on passive investing, index funds, low cost, being smart about taxes. But then we execute those strategies in software, right? Software is always on 24/7. It's always watching your money. It's reliable. It's not emotional. And that allows you to consistently execute every day in a way that a traditional advisor can't. So the net result of this is not only can we offer features that aren't available elsewhere, but the cost is incredibly low. And more importantly, the minimums are low. So, for many advisors, you can't get an account if you have less than $1 million. At Wealthfront, our minimum is $5,000. And we charge nothing under $10,000. And then above $10,000, we just charge 1/4%.
25 basis points.
That's right.
And what would the private wealth management people charge for their services, typically?
It depends. But the fees can range anywhere from 1 to 1.5%. There's different structures. It turns out there's over 28 trillion in investable assets in the U.S. alone. It's turned out the business world has been very innovative in finding ways to generate revenue off that, right? Some are commission-based, financial products, they do business deals, but most standard wealth managers at the firms that you would know end up charging between 1 and 1.5%.
Doesn't seem like a lot, but what is the average return that people get over the last 20 years on their money if they're using a wealth manager?
Yeah, that's a great point. I mean, overall for a diversified portfolio, straight benchmarks, you're talking about returns that are in the high single digits, right? It depends what time period you look over.
6, 7, 8.
Right. So that's the big deal. If you're paying 1.5%, it sounds like a small number, except 1.5% over 20 or 30 years compounded can actually eat into 25, even 30% of the returns that you'd expect. When you look at individual investors over the last 20 years, they've dramatically underperformed the markets. And that's for two reasons. One is they pay too much in fees, 1 to 1.5%.
And it's not 1.5% of the 7% return you get.
Oh, no. It's
1.5 of the top number.
Yeah.
So it actually is like taking away, if you made 6% this year, taking away 25% of your return.
Yeah, it's a big number.
Yeah.
And it's every year, right? It's not. So a lot of people pay for advice that actually is valuable advice.
Sure.
But they pay for it. They need it this year, next year, starting a family, buying a house. But they're paying that tax every year. I mean, I'm a big fan of financial advice, and not just from financial planners. Accountants, estate attorneys, all can be extremely valuable. But you'd never pay an estate attorney 1% of your assets every year for setting up a trust.
That would be insane.
Yeah. So
that would be, most people consider that being robbed, like being bilked, hoodwinked.
Well, it's just the history of the industry. I think that if you go back decades, financial planners, there was more of a history of actually the idea that you could produce value managing money, right? I'm going to get you into investments that no one else will get into, or I'm smarter than everyone else. I know where China's going. I know where Europe's going.
Edge, right.
I know where gold is going.
But none of that actually worked out, right? Like, it turns out Henry Blodgett's got that great book or whatever he did, and he just like, and all these smart folks who worked on Wall Street who no longer work there all come to the same conclusion, which is put your money in an index fund and don't touch it, and balance your portfolio between mutual funds and stocks and emerging stocks and resources and bonds and cash or whatever. There's some optimal mix.
Yeah, it's one of these rare cases. We want to believe that if you just do more work, you'll get more value. But it turns out there are millions and millions and millions of people all competing in the markets. It's just a hard game to win. And the evidence shows, the research, that most active managers, professionals, underperform the market indexes in any given time period. And then if you look at which ones beat in one time period, it gets even worse, because they rarely beat the second time around or the third, let alone finding someone who is great in stocks and finding the person who's great in bonds and the person who's great in real estate. It's a very, very expensive problem.
And so even the billionaire Mark Cuban or whoever, they would be better off just putting their stuff in an index fund and just being balanced. Like, nobody has the ability to outperform the market consistently over time. It just doesn't happen.
Well, look, I think that we're fortunate enough to have members of our team who are involved with different endowments, some of the largest in the world, right?
Ford Foundation or CalPERS or
even larger,
Harvard,
Yale, Yale, University of Pennsylvania,
tens of billions,
Stanford, Princeton. That's right. And those organizations have teams that identify the truly exceptional managers, have the way to negotiate fees, and always be on it. I mean, this is why Dave Swenson, who is famous for managing the Yale endowment, possibly better than anyone had managed that kind of endowment before, putting out his own book where he advocates to people like, you cannot invest like an endowment. And so I think that too many people, they want to believe this myth. They want to believe that, actually, if the rich have access to these special pools, these special investments, and that if they just read the right articles, look at the right stuff online, they'll somehow mimic those results. Now, the good news about Wealthfront is, even though a lot of people feel that way, it turns out it's a minority. What we're seeing right now is a real shift in attitudes towards investment. I mean, most Wealthfront clients are under 35, right? And so I spend all my time talking to millennials about how they think about money, how they think about their careers and investing, and it's been amazing to me. Our growth, this incredibly rapid growth, has been fueled by millennial clients. And overwhelmingly, millennials don't want to focus on their money, right? They have passions in their life, whether it's family,
they want
career.
to set it and forget it.
Well, if they're an entrepreneur, they think they're going to make their money building companies. If they're a doctor, they'll be a great doctor. If they're in finance, they'll be great in finance. They don't think that their path to riches is, I make money here in my day job, but then I'll invest it here, and someday I'll have enough money to retire, and I won't have to do the day job anymore. every millennial is looking for the type of balance where they actually get to work every day with the type of people that they like on issues and products that they're passionate about.
Right.
And that's different for everyone. But what our clients like for that reason is that set it and forget it. It's that automated solution. They know that they don't want to look at it every day. They like the idea of a system watching their money every day. But they don't quite believe that a person is really going to watch their money every day.
Right.
Once a month, maybe. Once a quarter, sure.
Yeah.
They like the idea of this service in the cloud that never sleeps.
People are starting to trust software. I mean, they're just
That's right.
understanding that software will do a better job. Here at the event, we saw the self-driving car from Google, and there's nobody in the audience who's like, I wouldn't get in it. But if this was 10 years ago, yeah, there's a lot of people who'd be like, I'm not getting in that car. Yeah. So when we get back from this first partner break, we're going to hear your bigger announcement.
Okay, sure.
After these messages. This amazing episode of This Week in Startups is brought to you not only by the hard work of my team, producer Gene and producer Jacob and everybody involved, but also a very good friend of mine, Scott Walker, from the Walker Corporate Law Group. He has a boutique law firm, and they specialize in startups and entrepreneurship. Now, he was very successful. He could be at any big, law firm he wanted to be at, and so could his team. But instead, they've decided to get small, get cozy, and work with entrepreneurs to build big companies. And they really are passionate about it, and they give flat rate pricing. So what is flat rate pricing? The hardest thing for startups is to manage their expenses. They have to conserve that cash. They have to be predictable because you're cash out at some point, right? It's something we all track. Well, what Scott does is he's such a mensch. He just tells startups, it's going to cost this amount to do your filings and to get set up, trademark, M&A. He just gives you a flat rate price, and he's willing to spend tons of time with entrepreneurs. I see him at events, sit down with an entrepreneur for an hour or two. Many of the entrepreneurs I forwarded to him, he just helped them, and you can just call him anytime you want, 415-979-9998. And that's easy to remember because 415 is the San Francisco area code. You know that already. 979-9998. 979-9998. And you can reach him at Scott at Walker Corporate Law or walkercorporatelaw.com. That's right, Scott at Walker Corporate Law, or visit walkercorporatelaw.com. And he's on Twitter as well, Scott Ed Walker. Great guy, great team, and there's no junior associates there, so you're not going to get stuck with somebody who is learning on your nickel. It's all just top-of-the-line attorneys doing fantastic work because they care about startups. I give him my highest recommendation. You can really trust him. So thanks again, Scott. Let's get back to this amazing episode. Hey, everybody, it's Jason. I'm at Jason on Twitter, and you can follow the show at TWI Startups. I'm here with Adam Nash, the CEO of Wealthfront, and a service which allows people to just put their money in and get a nice balanced portfolio. I use it. I love it. And you have a big announcement today.
Well, it is a big day.
It's a very big day for you guys. I knew this day was coming, too.
Well, look, when I joined Wealthfront, we had less than $100 million under management, which seemed like a big number for people trusting a service like this, and that was the beginning of 2013. Fast forward to today, and we just actually crossed $1 billion in assets under management.
That's incredible.
10x growth, and really the amazing thing is we went from no assets in Wealthfront to $1 billion in less than 2.5 years.
That's extraordinary.
Which to our knowledge is the fastest, certainly the fastest for any automated service, which is why we describe ourselves as the largest and fastest growing. For us, this is a sea change moment of people recognizing that young people really have different attitudes about investing. I had to go back in history a bit to find other companies that had grown this quickly. One that I'm particularly fond of is actually, I owe the credit to Andy Ratcliffe.
Yep.
Andy had run into Chuck Schwab at a Stanford event, and Chuck had said to Andy that Wealthfront reminds him so much of Charles Schwab because in the early days, the customers of Charles Schwab were young.
Yeah.
Right? People forget in 1975, the only people who were crazy enough to dial a phone number to place a stock trade and not use a full service broker were people in their 20s and 30s, small accounts. People getting started, but those were baby boomers in the 70s. And Charles Schwab has built now over 40 years, $2.3 trillion under management.
Wow.
Their average client is now in their 50s. They offer a range of services. They basically grew up with the baby boom generation. And so what we're excited about at Wealthfront is that we think that Gen Y is an actual a bigger generation.
Yeah.
They have very different ideas about what they want from an investment service, right?
Yeah.
They want automation, they want it passive, they want low cost. And we think we've stumbled onto something here at Wealthfront that's going to be pretty big.
So the only criticism I've heard of the service is people saying, how will it ever make money? Now, hitting $1 billion is a great milestone, but if you're only getting 25 basis points, a quarter of a point, my math tells me that's $2.5 million. I have a feeling that you're spending more than $2.5 million running this company now, and I understand it's venture backed, and you've got the world's best investors behind it. Pretty great list we'll get into later. But where do you need to get this business to make it like, a profitable, good business? You have to get to 10 billion, 5 billion, and
well, I think there's a couple questions in there. I mean, one of the funny attributes of this role, as you pointed out, you can say 25 basis points. Personally, I've just gotten very good at dividing by 400. One of my new math skills.
Exactly. I divide by 100 and then I divide by 4.
So, but I think you're thinking about it the right way, at least based on the current business. This is a business about scale. Right. Now, the amazing thing, if you look back to that Charles Schwab example, is it took them 6 years to get to $1 billion. It took them less than 6 years to get from 1 to 10. A little more than 6 years to go from 10 to 100. And then, believe it or not, in the next 6 years, they went to a full trillion. That's how fast they grew up. Now, the reason they grew so quickly is because that baby boom generation coming of age, people come into in their 30s and 40s, greater income, greater savings, greater wealth creation, and they're looking for services that match their expectations. Now, the good news for Wealthfront is we didn't take 6 years to get to $1 billion.
Right.
We took 2.5 years. So we're very optimistic about how fast we're going to grow to tens of billions, hundreds of billions of dollars.
It was 2 or 3 months ago that I just remember the 800 million number went on the homepage.
That was the end of March.
The end of March, or whatever, 2 months later. So if you're growing 100 million a month, you'll be $1 billion again in a year, or $2 billion in a year, or even faster. Who knows?
Well, the real key is the exponential growth, right? It's not just how much we're adding per month. It's the fact that number is so much bigger than what we were adding per month a year ago, right? It took us more than a year to get that first 100 million. As you pointed out, we now get more than that in a month. The real secret to this business, though, is not just that core business. I love the core business. I love the product and service. I'm proud of the fact that we have a track record of innovating and coming up with real new features. But I'll tell you, the real value here is that our clients seem to really love the service.
I'm loving it.
And so for me, I look at clients, in their 20s and 30s who are opening accounts and savings. It's not just about how much money they're putting with us today. They're still making money. They're at the beginning of their careers, the beginning of their wealth accumulation.
Right.
And I think that this generation, the truth is they dislike a lot of services, right? They're not fans of airlines or phone companies or cable companies. They do not like banks and financial services.
They're vocal.
But they seem to love Wealthfront for what we do. And so I think if we build a service that millennials love, I think we're not only going to have them for a very long time, but we'll have a lot of opportunity to offer them services.
I see a lot of Uber in this business. I feel like you're the Uber of financial services in that it's elegant and simple based on something that was uncomfortable, and there were just a lot of things you could say people didn't enjoy about having a money manager. Like I just get my cab and I get where I'm going and it's clean and I get to rate it, as opposed to like it's a dirty taxi and whatever.
Well, I think there's a commonality. Uber, like a lot of mobile innovations, gets this this idea that a single-use app, it does one thing but it does it brilliantly well. Like I can just pick it up my pocket, I can open up Uber, and I can get somewhere, and that's amazing. Wealthfront obviously isn't a mobile innovation that way, but it has that same simplicity, right? There's a lot of people who have money, and for everyone it's a different amount. Some people get uncomfortable when that amount of money is a few $1,000s, some tens. You'd be surprised, some people squirrel away huge amounts of money just in a bank account. But at some point, they know that they should do something with it. And they don't like the sales process of the traditional industry. They're not comfortable with it. Oh my God,
it's so icky. I mean, I get hit up by wealth managers like multiple times per week, which is really annoying.
Well, and I think, and by the way, you're fortunate because the truth is a lot of these young people don't meet the minimums anyway, right? Like when I was at LinkedIn, when we went public, there were a lot of traditional wealth managers out for the early employees and executives.
But when they get like to employee number what do they give up? When they're like, I don't want employee 101 or 201 or
Look, I think we had 1,500 employees about when LinkedIn went public in 2011. I'm guessing the traditional industry was really only interested about 50 to 100 of them.
Wow. So the other 14 are SOL.
Yeah. In fact, the new feature we just launched has a lot to do with that experience. We really believe that software's advantage here is not only that it can do this thing and do it really well, right? Like it turns out that if you want a low-cost, diversified portfolio, that's smart enough about taxes to reinvest dividends correctly, harvest tax losses. Software's perfect for that.
Yeah.
It never sleeps. And that, like I said, is really appealing to young people in general.
All right, when we get back from this break, I want to talk about my 2 favorite features of the product, which I'm going to get into, that are not only awesome about this product, but I think inspiring for other entrepreneurs to think about with their product when we get back from this very important message. Thanks again to our friends at Sharefile by Citrix. Sharefile is designed for business. It's file sharing that you can trust in the cloud to send files securely. This is what you want to use for your IP, contracts, term sheets, sensitive documents, and you can send them all as secure links with Sharefile. Files of almost any size, and you can access those files from any device, computer, mobile device, etc., laptop, tablet. And it's really sophisticated in terms of the granularity at which you can give permissions. You can request a file to be uploaded to a specific folder, then get alerts when somebody downloads it, have control of who accesses it, and what levels of permissions they have. You can send huge files as well. So go to sharefile.com, click on the radio microphone button, and use the offer code TWIST. That's right, go to sharefile.com. Click on the radio microphone button and use the offer code TWIST. We use this here in our organizations, This Week in Startups and the Launch Festival, to do all of our contracts, all of our assets for all the conferences and all of the shows. No credit card is required, and it's a 30-day free trial. And we have an exclusive for you. You can get the top 10 questions asked and answered by the top investors in the world: David Cohen, Joanne Wilson, Dave McClure, Steve Jurvetson, Brad Feld, Mark Suster. Just sign up for Sharefile with the offer code TWIST, TWIST. And then send a request a file link to sharefile@launch.co. Yep. Request a file link to sharefile@launch.co. Thanks again to our friends at Sharefile by Citrix. It's a great product. We use it here, as I said, and it's just really well put together. And you know those folks at Citrix do a great job with their other products as well that I'm a big fan of. Hey, everybody. It's Jason Calacanis here at the Recode Conference. Thanks again to my pals, Walt Mossberg and Kara Swisher, on hosting me. And just congratulations to the two of you on the first annual Recode Conference. I know you did all things D for a long time. It was spectacular, but it's really great to see that not only in this first year, this new first year, that you've upped your game, but that everybody's back. It's just really great. I'm very happy that the audience that you've built all those years followed you to the new brand. And so congratulations. I know how hard you guys work on this, and to the entire team. And thanks for having me again here and every year. Even in the early years, Kara, when you would, and Walt, when you would give me free tickets when I was broke, I also don't forget that. And I'll never forget it. So with me, Adam Nash of Wealthfront. When we left, I wanted to tell you the 2 features I really love.
Okay.
Number 1, when you sign up for the service, you go through a little questionnaire, and then it sets, on a scale of 1 to 10 on a dial, how aggressive you want your portfolio to be. And then it shows you almost like a heat graph of where your range of outcomes should be based upon what's happened in the past, including financial crisis. Like, okay, so you could 5 years out be down this amount or up this amount, but you sort of, it made me feel like really safe about the range of outcomes. I mean, I dialed that shit all the way up to 10, man. Fuck it. Oh, sorry. You can beep that stuff out later. I was like, let's go for it. But I dialed it up to 10. But this is a really interesting device, I think. Talk about how that came about, and the sort of blended portfolio, and the fact that I don't set it. I just do a survey of questions. I don't know if it's 10 or 12 of them. It's pretty simple. But then it goes 1 to 10.
Well, you've actually identified 2 parts of the service that I think illuminate some of the things that, frankly, millennials respond to really, really well. So the first is they're very attuned to hard sales pitches. This idea of sign up first and I'll tell you what it is later.
Ugh.
They don't like. Transparency is a big deal.
Yeah.
So the fact that when you go to Wealthfront for free, without even giving an email address, nothing, you can go through the risk questionnaire, assess your financial situation. We give you the ideal portfolio, the ETFs, all the research.
So you can just take it yourself and put it on Charles Schwab if you want to.
If you want to go to a brokerage and do it yourself, you absolutely can, because that's not what our service is for.
That's what I was thinking.
Right?
Yeah.
And that's okay, because it turns out there are some people who want to go manage their money themselves. And frankly, if we can help them, we have a research team with proprietary data. If we can help you pick the right ETFs, the right asset allocation, more power to you. Now, what we do charge for in the service is the idea that, well, we can watch your money 24/7 for a really low cost, right? You'll invest that portfolio at Schwab, but will you be there tomorrow to reinvest the dividend? Will you rebalance it? Will you be checking in June for tax loss harvesting.
And this is the thing I really enjoy too. My second point is I have the iPhone app. And the iPhone app, it feels like you've done about 50% of what you're eventually going to do. It seems pretty new. Is that fair to say?
Yeah, we just launched it a few months ago.
Yeah, it feels very 1.0. But still beautiful. But what I love about that is it gives me almost like a feed, like a Facebook, or it almost looks like Twitter actually, more than Facebook. But it tells me every time, like, oh, you received dividends, and then it says, oh, you made $322 in dividends. We're going to reinvest those into, you know, the portfolio and rebalance everything. Yeah. And if I didn't have you guys, like you're saying, I would not go in there for 4 months. There'd be whatever amount of money sitting there, and then I'd have to rebalance it, and that money could have been making money the whole time.
I was really proud of the design team on this one. Yeah. So when we launched the iPhone app earlier this year, you look at our audience, we really wanted to think through what people really valued in Wealthfront and how we could delight them with a mobile experience, right? Because the truth is, if you have a brokerage app, you might be opening it to trade. A banking app, you're looking at expenses, money comes in and out. We know people want to check in their accounts, but we decided that what people really wanted to see is that brand promise, which is that Wealthfront is always working for them. Yeah. And so we had this real breakthrough. We realized every one of these apps out there, every one of these websites, going back 20 years, I swear, early web, like gray background,
E-Trade,
whole thing.
Ugly,
It's this ugly transaction history, this list of all the things that it was done that no one reads, can go through, there's links to click. And we said, wait.
Download the PDF statement.
Yeah, isn't the relationship a little bit more like a feed, right? Like Wealthfront is managing your money 24/7. You might check a couple times a week. You might check a couple times a month. You might have checked 4 months.
I check daily.
But if you look in the feed, you have this wonderful mobile native interface to kind of scroll through with what's happened to your account. And in a weird way, it makes Wealthfront itself feel like what it is, a series of applications that are running over your money, right? You have dividend rebalancing. You have tax loss harvesting. You have the Wealthfront 500. If you use the single stock diversification service, you have that. And then we have content as well.
The single stock diversification is like, if I'm a Twitter employee, normally they would just give me a Charles Schwab account with my shares at the IPO. You say, hey, transfer them into Wealthfront, and we'll put you on an auto-selling schedule or something?
That's right. It's really simple. And like I said, this comes a bit from experience. Like when LinkedIn went public, there was no Wealthfront, right? And when Facebook went public, Wealthfront was too new to offer a service like this. So we were excited to launch this new service. It's right now for Twitter, not just employees. It can be ex-employees or investors. But we'll open it up to everyone eventually. But the idea was, for most people, they have this stock. They don't know what to do with it. What day do you sell it on? How much do you sell? I mean, I just told you, like,
it's nerve-wracking.
Well, look, active investment managers don't do a good job of this. The likelihood that you are going to pick the right day and time to sell an individual, highly volatile, new IPO stock, almost zero.
Right.
And it's stressful for people because usually it's a significant amount of money.
Yeah, it could be their life's fortune.
Well, yeah, or quite frankly, it could be a significant chunk of what they make in a year, right?
Yeah,
there's all different amounts.
Yeah.
So what we did is we tried to once again say, well, what can software do for you here? And the idea was, step one, tell us about how much stock you have.
Okay.
Unvested, vested, everything that you have.
Oh, really?
We give you this beautiful chart again for free. You didn't have to sign up, of what your stock, your equity, will look like over the next few years. People love this, right? It turns out HR never gives you these things.
Right.
Then step two is you say, well, how much do you want to sell up front? Like maybe you're going to buy a house, maybe you have student loans,
pay down,
something that you want to do,
cards.
Debt, exactly. Sell that amount up front, and then we make it as simple as, look, we know that you want to get from here, where you have all this stock, to a diversified portfolio, which we've already built.
Right.
Some people want to do that in a few months. Some people want to do that in a year, 2 years, 3 years. We give them a slider to pick how long they want to get, and then they set it on automatic. And then this is the beautiful thing about the system, is because we don't charge commissions, we don't try to pick the right day to sell. We just sell a little bit every day. Right? Stock goes up, stock goes down.
So I have 1,000 shares, you sell one a day for 3 years.
Well, if you picked 3 years and you had about 1,000 shares, they would end up selling it. And normally you wouldn't do this because you would never. You really want to wake up in the morning and place a trade every day? And
no, your broker's going to kill you.
And you're going to pay $8 a trade for that?
Yeah.
Like, it wouldn't make any sense.
It's a disaster.
Because we're free, we're happy to do it. And we even have some advanced features where we're smart enough to know, we ask what state you live in, so we set aside money for taxes.
Got it.
So you end up with this nice cash account funded for taxes. The rest goes in a diversified portfolio. So if you're an existing Wealthfront user, it's really easy because the money just flows in. If not, you set up an account. And once again, you've taken one of the most important financial decisions you're probably going to do that year. And by being smart once, you've taken care of it, even if you don't look at it for the next 6 months. And by the way, it's probably better for you if you don't. Right?
Really interesting feature, I thought, was the refer a friend feature. Now, I tweeted this and whatever because I wanted to support you guys and I just love what you're doing. So I start tweeting it. And then I start seeing like, oh my God, like 9 of my friends started accounts. And then I saw, oh my God, 4 or 5 of them had actually put money in.
Right.
And so it was tracking all of this, almost like I was in the affiliate business. Like, having done the affiliate stuff at Engadget and stuff, I had seen these dashboards before. This, to me, looked like one of those affiliate dashboards. And I get $5,000 free, or fee-free, because the first 10's free, and then I think I got 5. So I'm like, at my first $35K I have in my account, I don't pay you a management fee on. Right.
Well, I saw Drew here at the conference, but I thanked him. I mean, we actually used the Dropbox mechanism.
Oh, is there a drop? Oh, right.
Well, so instead of free storage, it's free money managed. It's money managed for free.
Right.
You get $10,000 managed for free. For everyone you invite, you both get $5,000 more managed for free.
Oh, you both get 5.
That's right.
Is that how Dropbox works? You both get 5, or you get 5, they get nothing? I think you get 5, they get nothing.
Oh, really?
Yeah, you're being double generous. It's cool.
Super generous. I like being generous.
Yeah.
But this is the secret. I mean, the truth is we now have clients in all 50 states and DC and military codes. Like, we don't have a marketing budget to spread to these places, right? What people can't believe is that we've grown so much faster than anyone else. But it's all been word of mouth, both offline and then online through the viral system.
Right.
And that's really been the secret. What we've discovered is, look, Americans don't like to talk about money. There's very few people in people's lives that they will honestly talk about money with.
Yeah.
It's one of the reasons that they turn to intermediaries and why so much bad information floats around.
Right.
But what we have discovered is that people do have a few people they talk about money with.
Yeah.
And it's not enough for them to like the service. If they love the service.
Yeah, net promoter high. Yeah.
Yes. If they love the service, they will tell other people about it, millennials in particular.
Yeah.
And so we've even seen patterns now where millennials are doing things like we see them join, and then somewhere in the year, they invite their parents. Right?
Yes.
We're starting to see that jump
That's
around.
going to happen for me, and I'm a Gen Xer. I mean,
Yeah.
I had my mom working with my money manager, and now I'm like, hey, I got to get... My plan for the summer is getting my mom off of the old money manager and getting into a new system so that she can stop paying these fees. And
Well, but this is why I really believe in with consumer products. There's such. I mean, this is a little bit of my Apple history coming out, but there's such a big difference between building a service that's a good value and a service that people actually love, that they're delighted by.
What's the difference?
Well, I think that believe it or not, last year I remember Tim Cook did the keynote at D11, the interview, and he said something that actually stuck with me because he was getting badgered about when's the TV coming out, when's the watch coming out, when's the next device. Yeah. And then somebody says, look, it may be out of favor, but Apple happens to believe that consumers do like to be surprised sometimes. And actually, my design background, it struck me as true. Like, we underestimate the emotional response. Part of the reason I think people love Wealthfront is because it's so different than what they expect, right? They have all this negative experience. And then when they try the service, the number one thing that clients tell me that they love about the service, they say, Adam, I've been using Wealthfront for a while. I love the service. You guys do exactly what you said you were going to do. And there's this weird glint in their eye, like that never happens in financial services, right? There's always
exceeding expectations.
Like the iPhone app, something different, something unexpected. I mean, one of the reasons I'm proud of the company for rolling out so many innovative services, right? Tax loss harvesting, Wealthfront.org, the Wealthfront 500, single stock diversification service. Each time we do this, our customers, our clients, they get this great sense that not only did I sign up with Wealthfront, I made a good decision, but it keeps getting better.
Yeah.
And that I
think the cost doesn't go up.
Of course not.
Right.
That's how we earn them.
One of the great things about SaaS businesses
Right.
and cloud businesses is like, hey, we added a feature. and the business is growing, so we really don't feel the need to like charge you for this. It's not like we're going to be like, oh, it's an in-app purchase to have this feature. It's just like, yeah, we're making enough. We get our 25 basis points. It's enough. Yeah. Like, let's just grow it and make everybody really stoked. What did you do at Apple, by the way?
Oh, I was an engineer. I was just there for a couple of years.
When?
First job out of school.
What years?
Mr. Craig Federighi actually hired me.
Oh, wow.
Out of Stanford. I was working on web objects.
What was web objects? That was their programming language?
No. So I actually interviewed at Next. This is in '96. It got acquired before I started. So I started at Apple. But
you interviewed at Next?
Yeah, in the old buildings in Redwood Shores and the whole thing.
Wow. How many people were working there at the time? 200, 300?
Yeah, it was small. I think it was like 400 at the time total, but they weren't all in
Who interviewed you?
office.
Daniel Lewin, or who interviewed you?
No. Craig Federighi was the senior guy. Bruce Arthur, a few others. Small team. Next was one of the amazing things about Next software team, because at that time they'd given up hardware.
Right.
Was they would do with a team of just half a dozen great, talented software engineers. What larger companies were doing.
Microsoft would be like 500 people, and they would do it half as good.
Yeah, the team working on the file system, Microsoft, would be hundreds. The team working at Next would be just a few, but amazingly brilliant, high caliber. Some of the toughest interviews I had to do, but got the job.
What do they ask you? What's tough about an interview? Do they ask you to like solve a problem, or they're just like busting your chops, asking hard questions?
It was a combination. They were very into holistic thinking. They would let you talk through an app or a framework thinking that you'd built, and then really dive down into what's the operational cost, what were the hard technical problems, how you structured them, what other things you thought of, really teasing apart. When you're doing framework design, it's not just about having the right solution. It's really thinking through all the different applications and use cases.
So this is hours of interview?
Oh, yeah, for sure.
Wow.
And so I was lucky enough to get the job. Apple acquired Next, and I'd interned at Apple the year before. So ironically, I joined this team of Next employees, but I'd actually been at Apple for a few months, right? And, in the land of the blind, the one-eyed man is king. So basics of like how to work with Apple HR or a system like I was helping folks with. But web objects at the time, Next, obviously they had a business where people were building applications over OpenStep, which ran on multiple platforms. But web objects was this first framework in the same era of the early app servers of building applications that could support thick clients, thin clients, N-tier architecture, right? Database, business logic interface.
Almost like Lotus Notes in a way.
It was actually a little bit closer. Like, do you remember? Trying to think back there, like Net Dynamics.
Yeah.
The early Java was new, right? Java was a couple years old. People wanted to build web applications that had more thick features. Swing just came out in Java.
Yeah, you want to download something, have it be a little more stable than the web apps were, but now it feels like HTML5 things are kind of working well in the browser.
So I'm fresh out of college, right? And I've been doing Java for about a year in grad school. And the good news at that point in time, no one had been doing Java much more than a year because it had only been around.
Exactly.
So good for a guy coming out of college.
Yeah.
And I learned a lot, and they were very deep thinkers. It was really amazing. Rhapsody was kicking off, right? What would become Mac OS 10, right?
Wow.
And so
this is in the 90s?
Yes, this is 97.
And you met Jobs? You in the same room as Jobs? Same meeting as Jobs ever?
Certainly not personally. I met him a couple times, usually a couple group settings. I think the one time I met him personally, like literally one-on-one, I did one of those things that in retrospect feels like a young kid. I have kids now.
Yeah.
And you see them sometimes do these horribly dangerous things and you're like, oh my God.
Yeah, no.
And they miss it by like that much.
Yeah.
So I, being the naive 22-year-old, Steve Jobs was in the cafeteria. Pixar had their shareholder meeting. And I had invested in Pixar, so I was a big fan of Pixar. I run up to him, fanboy I am, and he's talking to someone likely important about something.
Yes.
Kind of interrupt him. He's grabbing his drink. And I was like, apologize for interrupting, but I had to say I was at the Pixar meeting. It was fantastic. I really think that what Pixar's doing is amazing. And I realize now in retrospect that could have gone a lot of different ways.
Oh, yes.
But actually, he was fantastically gracious.
Yeah.
He just said, thank you. It's been amazing what we've been able to achieve, but I really think we're onto something special there. I'm glad that you went to that.
Wow.
Which,
he had his moments.
Might have been a good day, or it may have been such a ridiculous thing to do that he took pity on me. I'm not sure, but it was interesting. Steve, that whole era was interesting because Next was coming into Apple. Steve had come from Next.
Yep.
The short-term reign under Emilio.
Disaster.
It was a disaster on the product side.
Right.
Operationally, actually, some of the seeds of getting manufacturing and the supply chain.
And Tim Cook stuff.
Yeah, well, actually, Gil was good at that stuff with his background. It was just that he couldn't elevate the product message.
Right.
The most influential meeting I went to, I actually blogged about this when he passed away, because it was like my Steve Jobs stories.
Yeah.
I remember I actually went to that meeting where Michael Dell had recently said that Apple, what would he do with Apple? Because Dell was riding high. And Michael Dell said, honestly, I would liquidate it and return cash to shareholders. And so Steve Jobs has this meeting. He puts Michael Dell's face up on the wall. There's a couple hundred folks in the room, all from the Rhapsody team. Michael Dell's face on the wall, he says, well, what should we do? Michael Dell says that we're literally worth less than nothing, right? That we should liquidate the company, return cash to shareholders. And he said, you know what? In a way, he's right, because the world doesn't need another beige PC manufacturer, right? The world doesn't need another Compaq or HP or Dell. Like, they already have that, right? That's not what Apple exists for. Apple exists to make products that people don't just love, but that they lust after. He's like, what's the market share of BMW? And no one really knows. He says, it's 1.5%, but no one knows that, and no one cares. Because when one drives by, you either have one or you wish you had one, right? He's like, I don't care about market share. Apple exists in this industry to build products that people lust after. And if we can't do that, then we have no reason to exist. And if we do that, we don't have to worry about market share. And I thought that was fascinating because it was an elegant combination of a strategic truth, which is that there's different types of businesses out there. Winning the most market share isn't always the path to building the most valuable business. And at the same time, it married it with differentiation, right? What can Apple do?
Right.
In a world, it didn't seem reasonable at the time that Apple would ever best Dell in operations.
He set a goal that you could attain. 1.5% and less worthy. And
he said to the whole group, he said, look, we're going to run like a startup, right? If you want a nice 9-to-5 job that's guaranteed, where you know your equity is going to be, guaranteed, there's a lot of other companies out there. I mean, this is 97, right? There's a boom going on. There's a lot of other companies. Yeah. He said, this is going to be hard work. We're going to increase equity grants, right? But if we do this, if we can make products that people really lust after, we'll have done something really meaningful. That matters, that you can be proud of. And I now know, from reading history, etc., that wasn't an unusual pitch for him. I think he used variants of it in the past, but it was at the right time. It was really, when I watch other tech companies and all large technology companies, this industry gives growth, and then there's disruption and it takes it away, right? Like yesterday's Darling,
BlackBerry today speaking, like trying to figure out their future. It's difficult to even hear them say that when they own the smart market.
But it affected my thinking. It's like a combination of strategy in terms of really where's your differentiation, asking the hard questions, but also getting back to that design question. It was an impression too that if you're going to try and build a service that consumers really, that you can really sustain competition. I think that was the first inkling for me that it may not always be about utility. When I went through school in software, engineers in general, myself included, there's a strong bias to want to break everything down to a feature set. And this one does more than that. Right. This does it faster than that. Even in user experience, I will hear sometimes UI designers talk about, well, this takes 8 clicks, this takes 4. Right. This urge to quantify it. Right. But personally, I've come to humans just aren't that rational. I mean, I had this real epiphany late in my career at eBay. I took over to LinkedIn, which is, if all people wanted was utility, consumer markets would be different. I mean, food would be different, clothing would be different. So this idea that actually there's emotion, that it's safe to talk about it, and then social networking happens, social media, and I felt for the first time I was hearing designers and engineers actually talk about how people felt about different interactions.
Yeah, if people were strictly pragmatic, the cereal aisle would look a little different, wouldn't it?
That's right. Well, and I think people see this all the time, so we keep wanting to go back in this industry to kind of utilitarian roots.
Yeah, the Google, like Marissa with like, oh, what shade of blue? Well, let's test, 1,000 shades and let's get the speed down to whatever milliseconds.
Well, right. So, Marissa's a friend, but if you look at her thinking on that in the middle of the last decade and where it's evolved to now with mobile.
And now Yahoo, she's all style now.
And so I think that's been an evolution for everyone. And so, by the way, at Wealthfront, this is a big part of what we do as well, because people have a lot of emotions about money.
Yeah.
Right? It brings up positive emotions. I like to think about hope.
Right.
Empowerment. But negative emotions, fears of not being as good as other people, fears of having missed opportunities, fears of having money, there's all these fears. And so, I feel like 10 years ago in software, we would just pretend that the issue was all about the perfect design, what to click on,
speed,
user testing, and that's all good. That's all important, but that's become table stakes. Yeah. If you really want to win in the market today with consumer products, you have to touch them in a way. That's why I use the word delight. I know it's not perfect.
No, it's a perfectly
good
word.
It captured a little bit of that element of surprise, that emotion that it's not fully rational. When I talk to clients about Wealthfront, look, Burt Malkiel has built his career on helping lead this passive investing revolution. He's probably helped millions of investors. I mean, Vanguard has over $2 trillion in assets.
Yeah.
Now, based on this idea of index investing.
And Vanguard charges so little.
That's right.
You could use a lot of Vanguard funds.
That's right. I'd say a majority of the ETFs we use are Vanguard.
And they're like 15 basis points or 25 basis points?
Oh, less. You can own the entire U.S. stock market for 5 basis points.
It's unbelievable.
Yeah, but that's the problem is it's unbelievable. But I guarantee you talk to 1,000 human beings, and as immensely important as that is for their financial future, it's hard for that to generate emotions.
Right.
Right. And so what I really love about the modern era of design and software is we're starting to get better at knowing how to help people feel strongly about the things they should feel strongly about. Right. So when people use Wealthfront, we do a lot in the design to make sure that that transparency you talked about earlier, that's how we build trust.
Right.
Right? And trust will let those young people actually take the big step of putting their money in a system that in the long term will lead to the best outcome for them.
Right.
And even if they're human and frail and they aren't perfect with saving and they aren't perfect, we'll be managing their money on a daily basis to get to a better outcome. And then you learn over time. And so we talk a lot about emotion. We talk about a lot of design at Wealthfront. But this whole realm of behavioral finance, which has burst on the scene in the last 10 to 15 years, is about this parallel industry, right? Not software, but finance, actually discovering the same thing. Yeah. I know it sounds crazy. Humans are not rational. But the good news is, to borrow Dan Ariely's phrase, is they're predictably irrational.
Right.
And that means you can design systems that help people with things. I just kind of wish we could do for health and fitness what we can do with money.
I think Tim Cook's and the team over there have some surprises for us later this year in that regard with their own little wearable.
Well, if they can generate automatic exercise every day, it'd be amazing.
Yes.
See, the one
advantage, that's what it's going to do. It basically shocks you, and your arm just makes these weird flutters
I think stuff
while
like
you're
that
doing stuff, and it just you burn 3 calories each time.
Until
you lose 10 pounds.
Well, that's good, yeah.
And when you pick up food, it knows that you're going towards your mouth. It shocks you again. So you're losing 3 calories and you're...
You see, it's funny, but...
the ice cream falls off your spoon.
The truth is that there's some things in the world that are harder problems to deal with because with our own behavior, we're rational. The great thing about money and about assets is that actually they've become largely virtual.
Yeah.
Right? We don't hold stock certificates in our hand anymore.
No, you don't have
no one clips coupons.
Gold bullion under your bed.
Right.
Hopefully.
And that actually lets us win both ways, right? So we didn't create that innovation.
Right.
We didn't create that incredibly cheap Vanguard fund. Right. But you combine those things with software, and we can. The one thing humans are bad at is doing the same thing, not just for weeks and months. I'm talking decades.
You're defining a habit,
So
the power of habit.
That's why we think the automated investment service isn't a short-term thing. We think that this is a trend. We think over the next 50 years, I think even in the next 5 to 10 years, pretty much everyone will have an automated service managing their money because it makes too much sense.
It's better than a bank account. I mean, would you guys ever add checking accounts to what you're doing so that I could just write checks out of my account and manage that too?
I'll say
that must come up at a board meeting or something, brainstorming meeting.
Well, certainly it does. I mean, we're growing so fast, we're pretty heads down on the core business. But I will tell you that there's so much innovation and reimagination going on about financial services in general. The one thing I'm confident of is that if we do a great job delighting our clients at Wealthfront, we already have it. Our clients are asking for more and more services from us.
I am. I got a big long list for you. I send it all the time.
And we do the same thing with every service. Is we say, where is there a service where we can do dramatically better in software?
Love it.
And that's what we do. So.
Awesome. Well, listen, I wish you the best success in the world. And I guess my closing question, when the market collapses the next time, and inevitably will, and it's 20, 30% down, do you guys have an actual plan for how to tell these millennials on how to manage it? Or are you going to try to educate them before that happens that, hey, this does happen once in a while, that the market could lose 10 or 20 or 30%? Because you've only existed in an up market. So that then reflects on the product as, hey, if you use this product, things go up. But it will go down at some point. Is there a strategy for dealing with that you've pre-planned?
Well, I think the best way to look at it is, a lot of the expectation about investors comes from historical research, but it turns out to be heavily biased towards older investors, because historically only older investors had the kind of money that advisors would engage with.
Right.
What I see from millennials right now, I can't speak for everyone, I say from millennials is two things. One advantage we have is actually we don't see our clients once a quarter or once a year. People actually visit Wealthfront quite often.
Yeah.
And now that we have the iPhone app, we actually get a chance to talk to our clients many, many more times than people think. The second thing I'll say about millennials is it's the weirdest thing, but not surprising given the history. The millennials have already been through 2 market crashes. If you ask 100 millennials if they think the market will crash, they'll say, of course it does. Markets always crash.
Yeah, mom and dad went through it twice.
But their history has been that markets crash and they come back. And also their cynicism, the reason they like index funds so much, is because that's why it sounds like a sales pitch that you're going to beat the market. Right? They actually have memory like, no, that didn't happen. Right? Actually, everyone who thought they were clever getting out had problems getting back in.
Yep.
By the way, a lot of clever people even did worse, or they mistimed the coming back, or they're in the wrong assets. They thought emerging markets would go up.
So you don't underestimate them.
So I actually think that what we're going to find is that this type of investor is going to behave differently than we expect. They're young. They have really long time frames. They've put this on automatic.
Yeah.
Most of their money, if you ask a millennial where they think they're going to make most of their money over the next 30 years,
it's over here.
It's from their careers. We blog at Wealthfront about careers quite a bit, because actually our clients associate that with financial success far more than they associate the return they're going to get on U.S. stocks versus municipal bonds over the next 6 months.
Awesome.
And so we'll see, but we'll adapt with time. I do think we're building a different service, though, and that's because the clients are different.
All right. Well, listen, I've absolutely fell in love with the service. It's great to be working with you guys, and continued success. Congratulations on $1 billion under management. And if you haven't tried it, I give it my fullest endorsement. Go check out wealthfront.com. And Adam, you have a Twitter handle. What's your Twitter and your blog?
It's Adam Nash.
You're Adam Nash.
Yeah.
Just, like it sounds. Yeah.
And the Wealthfront blog is fantastic.
Blog.wealthfront.com.
Blog.wealthfront.com.
And what's your personal blog? People might want to read that.
Oh yeah, I've been blogging for years. Blog.adamnash.com.
Blog.adamnash.com. Okay, and thanks again to producer Gina and Jacob for setting all this up. I know it's a lot of hard work to come all the way down here and hang out at the beautiful ranch down here and be out of the office. So thanks for all the hard work. Now Jacob had to carry all this stuff. And thanks again, Kara, Walt, and the whole team here, Liz and Brooke and everybody who helped make this a success. And we'll see you all next time on This Week in Startups. Bye-bye.